Hello and welcome to Trading the Trend. JP, Josh Pink, wants me to ask you, what trends are you riding? That's the question you should be asking yourself every day. And if you don't ask yourself that question every day, you might not be maybe riding the trends that you want. Okay. And so JP, a little fun with you back there. All right, let's go ahead and get started. We got Connie here with us in the chat. We welcome her, fellow instructor. We'd like to welcome all of you here as well. Kelly, Life in the Fast Lane, BJ, Jan NXZ, Wrong, and many others. Welcome to all. Now, just real quick as we get started, remember that this class, we do focus on head knowledge about investing. We also do attach with it some passion. We also attach with that desire. You'll probably find out is the head knowledge is really not that bad, but it's actually having the passion and the desire to actually apply and practice what you're learning. That is two very important things. So you'll kind of see in my teaching style, I do put those in as well. And I think those are very important. Those who really are probably on the track of their financial goals, they attach with it passion, they love it, and they have a desire. They have a stated goal. Now, with that said, we'll go ahead and get started. Remember, we do post educational content on X. There's my handle at James Boyd CS. Also, remember, Connie will actually put her link in the chat. That way you can just click on it and follow her as well. Now, just real quick as we get going here, remember that we'll talk about stocks and options. And so definitely don't think that just because we talk about options, we don't like stocks. That's not true. But just in the disclosures, remember that options do carry a high level of risk, not suitable for all investors. When we also talk about the information here, to provide for general informational purposes only. This webcast discusses technical analysis. There's other important approaches as well, including fundamental analysis. Also understand that some of our classes, they're not all the same. So like in this class, we might focus more on technicals and yesterday fundamentals. That does not mean that we can't use them together. Tomorrow we'll talk about ETFs. It doesn't mean we don't like ETFs, but we just have a class specifically for the ETFs. So understand that if we could just have a class where we could talk about everything, we would combine it all together, okay? So don't take that as, hey, we don't like it today. That's not true. The class is on this, and that's why we have those disclosures. So I've had some questions on that. Remember when we talk about examples, we will do those for educational purposes in the software version. Investing involves risk, including loss of principal. And also remember that the short options can be assigned at any time up to expiration, regardless of the in-the-money amount, also known as American-style options. Now, also, when we talk about examples, they are just that. And if we talk about, let's say, futures, at least the pricing of futures, understand that those have a separate disclosure as well. Now, I want to kind of talk about just real quick the indexes. I want to talk about the indexes from 2 points of view, the shorter term type of moving average and a little bit more lagging type moving average as far as what we're seeing. As we bring that up, we'll look at the weekly chart. Now, today is really the first day that we've been working on for about the last month, sample plans. We haven't even really started on building a portfolio yet, to my liking. We talked about the sample plans. We did some example trades with those sample plans, but we really haven't done anything yet, okay? And I'll show you what the paper money accounts are at now, what positions. We need to talk about that because we've got an expiration tomorrow. And then what we're going to do is we're going to set up some new positions, but manage existing ones as well based on the plans that we discussed, okay? Now, let me go ahead here and just hop right in for just a moment. Now, I want to pull up just real quick a couple things that kind of poked me in the eye today, okay? So let's go to the left-hand side. Let's actually work our way up. So let me kind of widen this for just a second. Let me start with just really quick this. And when I bring up this, I'm going to pull up, the ticker will actually pull up is SPX AR50. Now, if we look at, let's say the it's A50, excuse me. This is going to be the number of stocks. So it's $SPX A50R, excuse me. This is kind of interesting here today, and we'll look at this on the 200-period moving average as well. You got a brand new high on the percentage of stocks trading above their 50-period moving average. Now, that's kind of interesting, okay? We go back to, let's say, what about the number of stocks? If we said the 100, can we get that? Let's double check, okay? And you're going to see that, just the $SPX A100R, brand new high as well in the shorter term. We take the 200, now you're probably expecting that. Let's just hit it anyway while we're there. The difference in the percentage of stocks trading above their 200 period moving averages, that's almost been the highest we've been in the last year. Interesting. Okay. I mean, who doesn't love a good upward trend? All right. So I thought that was kind of interesting. Okay. Especially the number of percentage of stocks that are trading above their 200. Now, some of you did ask me in the surveys, which I'll respond to in just a moment. Hey, I haven't heard you talk about bearish strategies yet. I'm going to get to that, but we had to outlay the bullish ones first. I always love a good bearish position. Okay. Just like that. Some people don't. I kind of think they're interesting. Okay. Now, if we talk about, let's say, kind of something that was a little different than yesterday, we talked about the NASDAQ kind of being the index that kind of got dropped down below its shorter term moving averages. And we said one of the cons are really about a whole moving average is it's going to be very, 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 very close to the price. The bad part is just because it drops maybe even 1 or 2 days, it might not be as bad as what we thought when you kind of look at it on a moving average that's not weighted. Okay. Now, if we go back to just real quick what this looks like on the exponential moving average, you're going to see that blue line right there, okay? And at least I need to fix this. I think we showed on this how to change the moving average, and I'll put that right there. I did change the 50 back to the 30, okay? But if we looked at this even from yesterday, we're sitting right on the 30 period moving average, okay? And I mean, would it cause some sell signals to trigger? Stops? Maybe. The lower it went? Maybe. Sure. Okay. Doesn't mean everything. But yesterday was some weakness. Absolutely. It put stress on the portfolio and positions. Today, trying to pop right back up. Orange colored candle because we're right up near the area of resistance. Okay. Now, again, nobody likes those red colored candles. Boo. Nobody likes that. The one thing we have to say as far as a little positive, can anyone tell me kind of what's happening inside that area of NASDAQ that's kind of interesting? Are there any industry groups that you say, James, pay attention? Well, yeah, we probably say, look, semiconductors. I mean, for crying out loud. The semiconductors, when we look at a moving average, like a 10-day exponential moving average, it's not weighted. Okay, it is going to be closer to the price than the simple moving average. But we did not even fall down below the rising 10 period moving average. Okay. Today, a brand new high. Now, some of you have made mention when we see semiconductors at brand new highs, what are some of those memory chips, not just semiconductors, but memory chips? Can anyone give me the tickers of a couple memory chips? We would still use semiconductor stocks as really a proxy for the memory chips. It's not completely perfect, but it's going to be close as we can get right now. Now, the other thing we got to say is, can we get a little happy emoji here for the Russell? Look, what color is your favorite green candles? Well, I said, I just answer my own question. What is your favorite color candle? Green. Okay. Sorry. It's not the first time that's ever happened. So the biggest actually thing is here, these trend candles, green representing we're above both moving averages, and that, for example, we don't have any area of resistance. Now, remember, someone doesn't have to play small caps themselves. They might just be playing, let's say, the index itself, something that tracks the index, okay? And remember, if I said I don't even do that, hypothetically, why do I care about the Russell? Because this is it's a sentiment gauge for risk-taking. If this chart is actually going up, it actually tells us the market is probably more bullish than our friend says it is or our neighbor says it is, who probably is saying they're in cash. Now, if we actually brought up the VIX, we did notice actually the VIX went up yesterday, and it went up uncomfortably to 18, but it kind of got back in that neutral-ish type area. Still kind of benign, okay? Super quick actually on the sectors here, okay? When we look at, let's say, the technology space, we cannot really say it's breaking out yet, but can we say that it's chiseling out, okay? Maybe like a new support area. I think we could say that. Little touches right there. 1, give it to me. Give me a 2. Give me a 3. So really this $2,900 area, price level wise, that's really been an area where there's been a higher base of support. Bullish investors love support, especially if it's close to where the current price is, okay? And it's higher than where it was before. Now, the one thing we've got to say is when you look at the transport, just real quick, when you look at the transports themselves, we cannot say that that's bearish because that just hit us right in the eye. Now, again, the bullish investor loves those candles when they're just like little orange and purple only. Orange better by itself. Orange and purple, you hurt my feelings a little bit. But again, this one right here where we only went down for a day, orange color candle, one day, and a bang, right back to the upside. Hey, oh my gosh. You know who doesn't mind that? The person that's long. You know who actually that really makes upset? The person that's sitting on the sideline. That's why they're mad, okay? But there's some investors here that have been riding those choo-choos, airplanes, those trucking companies, etc., that have been saying, spank you very much, as Hannah would say. And you can't disagree with Hannah. Now, the biggest actually thing is when we say in the transports, we would also say, look, industrials, kitty cat, we've said that a number of times, Caterpillar hitting a brand new high, but who's counting? And if you look at utilities, the thing that we would have to say on utilities, if we knew nothing about technical analysis, absolutely nothing. And I said, look, the only thing I might know about technical analysis is a crossover. Well, we had a bullish crossover there. We had a bearish crossover here. We had a bullish crossover right here. And I know we're going to ask the $1 million question. What's the $1 million question? Is it going to go up? Why do you ask that question, right? Because the truth is nobody knows what's going to happen. They're just taking the signals and seeing what's going to happen. That's what's happening, okay? So some of these utility stocks, the sector. So option number one, the investor might say, I'm just going to buy the sector. What is the ticker? Two, are there any stocks in there that we can find the S&P 100 underneath that sector list that is actually going to tell us what stocks are in there that might be showing bounces, breakouts, crossovers, or all of the above? Now, anything else that actually hit us today? Let's super quick. We actually see Staples, rammed. Almost like a firework going straight to the upside. Never gave the bears a chance. Next time you look at a channel, just remember IXR. And if we look at the last one, just real quick, when you look at base materials, well, there's nothing to say. My gosh, it's just trending is trending, okay? Now, I want to kind of talk about, just real quick, a couple positions that we need to address real quick, okay? So number one, and by the way, so we talked about setting up two portfolios. So about, what was it, December 22nd, I think? We reset this portfolio. The IRA, we haven't really done anything yet. We sampled a couple trades based upon the plans, but today's the first day. We also, for example, reset this to, let's say, the margin account to a lower dollar account. Here it is. Again, didn't really do any trading because we were setting up the sample plans. Let's get started. Now, today we have maybe one or two things that we need to quickly discuss. One thing that I want to kind of just go back to just briefly, okay, is, let's say in this case, this NVDA. Now, yesterday we talked about the NVDA position being down. I did not go completely through with selling it because really, in truth, and some of you saw it, we actually had a covered call as well. Now, think back to the sample plan when we talk about covered calls. You got a 192 call. Do you think anyone wants to buy the shares in the paper money account at 192 if they can go out in the open market and just buy them for 188.73? I'm not going to repeat the question. It should be pretty basic. Probably not, right? No one's going to probably want to buy those. They could, but they're thinking, why would I buy them for 192 here if I could just go in the open market and buy them for that? Less. So what's the value of the call? Well, the value of the call is at, let's say, sold for 440. It's at 36 cents. Why are we talking about this? 1 day left to expiration. We're inside the week. I don't want it to go to expiration, okay? Want to do something with it before. Now, so yesterday, when we looked at this position, we were like down $400, $500-ish. So the reason why we didn't go through and sell the shares by itself, yesterday is not a derivative class, so I couldn't do this, okay? But since the trade was a covered call, I did not go through with selling it, because if I would have sold the call, it would have left a short call in the paper money portfolio in an IRA account, which is called a naked short call. Naked meaning that you do not have the shares to cover the obligation. You're short, okay? Now, without even looking at this chart, I want to actually go ahead and say, look, what we're going to go ahead and do now. Notice, and now, by the way, this is not unusual. If you look at the stock, we have made literally peanuts, $141. If we got 100 shares, we're only up $1.42 from where we got in. I don't think anyone say, wow, you're amazing, okay? However, where did the bulk of the gains come from? Answer, the short call. Time decay. This is not unusual, okay? So sometimes the position, whether it's a short call or a short put, that's the side of the trade that tends to make more than sometimes the long call or the shares, because the only constant typically is time. Tick, 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 going by. Now, what I'm going to do without even looking at it to follow through on what we talked about yesterday is we're going to right click on this, create closing order, and we're going to sell. So the gains on that one are $550 with 145 coming from the shares, but 400 of it, who's counting, is coming from time decay. Now, wait. Would that call have been up that much as of yesterday? Yeah, it would have. It would have been up more because the stock was down, okay? So what we're now going to go ahead and do is say create closing order, sell, okay? Sad in this case, if we ask ourselves, well, did we make the maximum gain? So that's the question. How much of the maximum gain did we make? Can anyone beat me to that? Now, guys and gals, we're gonna give you, each other an opportunity. We're gonna do this for a whole entire year, not for a week and then quit, okay? We're gonna say, what is the max gain? Well, the max gain is from 192, okay, down to 187.33. That's where the stock was entered. This is gonna be the stock appreciation is 467. Type in the chat if you're with me on that. Are you with me? 183, that's where the stock was purchased. 192 is the short call. That is actually the stock appreciation, but that's not all. This is not an infomercial, but it could sound like it. Now, if you notice this, it's 440. So what you're going to see if we sandwich those two together, it's really going to be 70907. So how much of the maximum gain did we make? Answer, $553 of the maximum 907. We did not make it all. We're going to try to get some, okay? 553 of 907. We got 60% of the maximum gain, okay? So how do you get the maximum gain? The only way you get the maximum gain is you get the stock to close above the strike price. We're not above the strike price, okay? All right, so that one wasn't 100%, wasn't 80. We'll take 60% and say, spank you very much. Now, what we're going to do is going to go ahead and say, confirm send that order. Now, you might be thinking, well, wait. I kind of wanted NVIDIA. Now, we got to ask ourselves the question, is NVIDIA the most bullish semiconductor stock? Now, I'm going to need your help right now, okay? So if I pull up, let's say, NVIDIA, and that's what NVIDIA looks like, okay? That's what NVIDIA looks like, and you got earnings coming up right here. Give me some names of some semiconductors. Hand them over. What are they? Give them. Well, I don't think anyone's going to say, wow, NVIDIA is so much stronger than CLAC. NVIDIA is so much stronger than Micron. NVIDIA is so much stronger than AMAT. I don't think anybody would say that, okay? Now, does that mean maybe the investor might say, well, I'm just giving up on it, let's say NVIDIA completely? Wait. No, we're not going to go there, okay? Now, we might just change the strategy. So first off, let's say the investor said, look, I don't want shares of NVIDIA because I don't think the trend's that strong. Well, so now we actually go to options now. We say, okay, geez, if maybe I don't want the shares because the trend's not been that strong. Is there any way to play a probability type trade? Now, probability type trade might be, let's say, example given, the ones we talked about was a short put vertical, a cash secured put, okay, a long call vertical. If you said, well, James, I want to play a probability-based trade, but I really kind of want to have a trade where it's more based on time decay, and the stock might go down somewhat and be a little bit more forgiving in terms of break even. So as I say that language, it's kind of leading us mentally down the path of shorting the stock. No, never talked about that. We would say short put vertical. Now, the short put vertical, we actually said, we talked about this, man, maybe the volatility, something that might have a 35 plus in the implied volatility might be interesting. So trade number one here. So we got out of the NVIDIA cover call trade we actually had here. We said, look, can we come over here and do maybe a short put vertical, which is not shares, but it's trying to play a little probability-based trade. Now, we talked about going 20 to 50 days expiration, check, monthly options. We talked about selling a put, looking at starting point, selling, let's say, a delta between 30 to 40. Now, if we said the delta 30-ish, we actually said we would like to see the option spreads greater than 20 cents. No, we never said that. We said narrower than 20 cents. Now, what we're going to do is we're going to right-click on that bid right there, sell. We're going to go right to the vertical. Now, if someone said, well, James, I can risk in this case $400, well, that's probably why you're doing a $5 wide spread. Because the max loss is $365. Can't do a $10 wide spread. Now, if you said, well, James, I could actually take a risk of, let's say, $1,000. Oh, you might do a 170 put, okay? So that 170 put, now again, we're making an assumption, assume, right? Which is not great, okay? We want to double check bid-ask spread right now, 2 pennies wide. Look at the short put, 10 cents wide. Now, that's this bid-ask spread showing us the tightness of getting in, getting out, getting in, getting out. And right now, the narrower it is, the better. That liquidity is not always going to be the same. Second thing, we'll just double check. What's the volume like, which is today? Buys or sells? Buys or sells? What's the open interest like? And it looks like across the bid-ask spread, volume and open interest, there's some volume there. Now, trade number one, what we're going to do is we're going to sell the 180, buy the 170, and let's assume that we could risk $1,000. Well, what we're now going to notice is in that trade is it's $235 if we can close above the strike prices. Break-even expiration is at 177.65. And then we actually look at the max loss, which is if the stock closed below both strikes, 765. Now, if we said, well, what is that return on risk? Meaning the maximum profit divided by maximum loss, it would be 235 divided by 765. And it's literally 30%. So, is this something based upon our plan? If I actually showed you, for example, the chart, is this showing a bounce or a breakout? I'll just take a yes or no. Is it showing a bounce or a breakout? Go ahead. What do you notice? Is it showing a bounce or a breakout? Now, this is where some people struggle because they're like, wait, you're trying to make me commit. Okay, I don't like committing. I don't like that. Well, no, I mean, just answer the question. Okay, is it bouncing or breaking out? Well, if we talk about, like, say, a diagonal line, okay, this diagonal line right here, over the last couple of days, we kind of could not get above the diagonal line to save our life. Today, we open above it. Could we close above it? That could be a breakout. The other thing that would actually kind of tell us a bounce is we actually see in that case that bounce right there kind of showing that as well. Is it a crossover yet? No, but it is showing a potential breakout. Now, here's what it really comes back to. Why do some investors struggle? They hesitate on trading what they see. And second, they are unsure on how much risk they're willing to take because they've never answered the question. Okay? All right. So we've already gone through that. And we're just going to now execute and say, are we willing to risk $763? If we lost $763 on a portfolio at $154,215, is it going to be like, James is going to throw in the towel? Just throw in the towel. I quit. No, if this position loses, it's going to lose 0.5% of the portfolio. So again, we're trying to make it manageable where if we do lose, when we do lose, that we can handle that. Okay, all right, gonna go ahead and actually send. All right, now let's go to actually the next one just real quick, and we're gonna kind of look and see if we can't change the strategy, or if we need to. So on AU, what type of strategy is this? Well, that 100 shares in the short call, that is a covered call, and we actually got the $80 put right there. Now let's draw this up. I'm a big fan of drawing it up, okay? So let's say we buy 100 shares at 86.52. Okay, 86.52. Where do we see that? Right there. The short call is at 90. Okay, so let's put that cap right there at 90. And you're going to see to the downside, which is the 80. All right, now we got to ask ourselves the question, where are we in this? I call it the field goal. Well, the current stock price is at 99. We're up here, way up here. Can you see me? Okay, 99.19. Now, without looking at anything, what do you think? Well, this is where the investor bought the shares. The stock is way above the strike, and we're thinking someone might have made a little cheese, cheddar, geld, whatever you want to call it, dinero. Now, we got to ask ourselves the question, what was the max? So the fact that we're this 10% above that cap of 90, it leads us to believe that, geez, we might be potentially profitable. We might actually be near max gain. Let's run the numbers. Well, if we got in the shares at 86.52, the stock appreciation is 348, okay? And we got to ask ourselves, well, what was the credit or debit to do the collar? The answer, we got 4 cents. I know it's stunning, okay? That's what we call that a zero cost collar. Now, at least right now, am I missing anything? No, I don't think I am. The max gain should be right around $352. It's really the bid-ask spread that's showing us even a little bit above that, okay? But really, this maximum gain should really be about $352, which we are at that and or above that. What causes that? It's the bid-ask spread, okay? Now, so if we let this go to expiration, what's going to happen? Someone's going to want the shares at what price? 90. And what happens to the 80? It expires worthless, meaning the stock is not below that. Now, someone might look at this and say, well, yeah, I could have made more, but you don't understand. Like, we're trying to actually get, some people call it base hits. We're trying to just, this is like the game of football. We're just trying to get the first down. This is not the last time we're ever going to trade AU to begin with. We're going to say, look, we're going to right click. Now, we're going to get out of the collar first, okay? Now, someone might ask the question, well, James, wonder if this put is at 80. Why would I pay a commission if it was? They might not, but the risk is if the stock closed below the 80, that could be exercised. Noted. We're going to right click on this call and click on those shares. The gains, we're trying to lock those in. And we're going to actually get out of the covered call piece. Why not the put? Can anyone tell me again why not the put? Well, because the put is only worth a nickel. We can only lose 5 more cents on that long put, so there's more upside than downside on the long put. I said on the long put. Remember what I said, which is if that stock were to crash tomorrow, that 80 put could become worth something, and if it closes below that long put, it can become short shares. If you said, I don't want to go through that, that's why the investor might sell it, okay? We're going to create closing order, sell, okay? Now, if there's someone saying, yeah, I could have made more, I could have made more. Well, how about we just make something? How about we just start there, okay? Look, if we grab these $300-400 and we can do them maybe 2 or 3 times a week, it's like first downs in the football game. We're just trying to move the ball down the field to get a touchdown, okay? Confirm send. Note the commission, buying that call back for 65 cents, send the order. Now, go back to the chart for just a second. When you look at AU itself, now, again, we don't want to assume that, oh, I put my order in, therefore, why didn't it fill? Well, because you're on the last day of expiration, the bid-ask spread widens out. So we're going to give this about, let's say, 2-3 minutes to see if it can fill. And if it doesn't, we're going to go in and make sure it fills, okay? Don't assume, verify. Now, if we looked at this chart, would you say that the trend is still trending? And remember, the moving averages crossed, and they crossed right here. And this is what we do as technicians. Well, duh. Why didn't I just get in back then? Because you were your own worst enemy. You overthought stuff. You actually said, how much higher can it go? Too high, too high, too high, too high. So instead of trading the technicals, you're trading your own thoughts, which haven't really been working. So the biggest, it didn't work for me either, okay? Just being honest. So the moral of the story is, why did people buy it? Because it was going up. Why did people buy it? Because it went up to make a high and make a higher low, and it was showing the technicals. And the fact of the matter is, they're just still trying to ride the trend. Now, let's say I said to myself, you know what, dadgummit, I don't really want to actually outlay that capital. I want to maybe I maybe have an overexposure to that area. You got earnings coming up on 219. I want to maybe do something that's probability based, but maybe something that does not require shares, but also has a higher potential profitability than, let's say, a short put vertical. Well, let's do this. Let's go back to the trade tab. Let's work our way over and see, is it possible? Now, what you're now going to notice is on the spread, I could have a lot of ideas. You could too. But maybe when you go to execute the ideas, you got to ask yourself, is it matching the plan? Not my feelings. What does that even mean? Feelings. Okay. Well, the problem is that's 60 cents wide. This is 60 cents wide. That is 50 cents wide. So that's going to be tough. You got 80 cents over here. You got 50 cents over here, 30 cents over here. I don't see it. Okay. So on AU, I'm going to say, no, thank you. Now, could we go to, let's say, something else in that space like AM and see tighter bid-ask spreads? I am not, maybe a little bit, not there. I don't see it on the call side there. And if I look at NEM, do we see anything there? The tightest bid-ask spread we see is in NEM. So when you went to go say, I'm going to try to actually do a long call vertical on AU, your plan said what? No. Too wide. So the investor says, am I done? No, this is like if you're trying to buy a house in the neighborhood. If you said the house, I don't like that house, or it's not available, it doesn't mean there's nothing else in the neighborhood. You just keep driving or walking around. Well, if we went across the street to another precious metal stock, which there's not that many of them, we go back and we said, NEM, if you pull this up, is showing a little bullish trend. It's the same looking type trend. If I said, look, we want to do a long call vertical, there's 30 cents wide. Now, 30 cents wide in the bid-ask spread does not mean that we can't get filled a little bit less or in the middle, but that's at least a little tighter. Does that make sense? So sometimes you see some of the wide spreads. It doesn't mean throw in the white towel. Think what else is in the neighborhood. Now, what we're going to go ahead and do is we're going to actually take this, but you got to be mindful of the spread. We're going to try to chisel that down a little bit. Buy vertical. That's a call vertical. Now, remember what we said with the call vertical? We are trying to get in the long call 1 or 2 strikes in the money. Okay? So we're buying the 110 call, which is in the money by $4.25, and then selling the 115. Now, debit. How much we got debit? We got 245 debit. $5 wide spread, which must mean the max gain is 245. That return on risk is really more 1 for 1-ish. If we said, hey, look, I can really risk about $500, do I have to do 2 contracts of a $5 spread, or could I actually maybe just spread this out to 120 and actually said, what are they pricing that at? 463. If we said, don't assume, go look at it with own eyes, okay, 30 cents there as well. We're going to try to make sure we don't want to get filled at the nat price. We're trying to get filled at the mid, in between the bid and the ask, okay? Now what we're going to go ahead and do is go long call vertical, okay? Now you might be saying to yourself, James, why didn't you do AU? We talked about that. The spread, I can't, okay? It's too wide. We didn't throw in the white towel or wave the white flag. We actually said, are there any other stocks in that area, which we'll show you the list in just a second, that actually really kind of have some tighter liquidity on the options. There's the debit, max loss, max gain, profit, in other words, $5.35. Spread, since you're on both sides, $1.30. Now here's the pop quiz. I want to see if you actually listen with the same plan. Which option Greek is the highest on a long call vertical? Delta, gamma, theta, or vega? Which option Greek is the highest on a long call vertical? Now remember, the purpose of that long call vertical is you are trying to trade the trend, but you're trying to trade something that is defined risk. Bill, you're disqualified. You're only allowed one right answer a session. BJ, you're correct. Okay, my gosh, I gotta give, okay, that's it. I'm not giving the easy questions anymore because everyone got the right answer. Or you guys just said copy and paste. You're like, who said that? Who said it first? Yeah, the first one, who said that? Yeah, it was Bill. Everyone must have just said, look, in Bill we trust, and just said copy and paste. You guys are amazing. Bill, well done. Look what you did. Now, let's actually go back to the list for just a second, okay? Let's go back to the list. Market Watch, okay? So if we said, hey, look, I want to pull this up, and this goes back into the question that was in the chat. We're going to go to Market Watch. We're going to go to Visualize. And so what I want to do is just real quick is if we look at the S&P 500, we actually now pull this up. If you're not doing this, you're kind of missing the point here a little bit. So when you look at materials, these are the material stocks that pulls up. There's NEM, right? There's a steel stock. There's FCX, the Freeport-McMoRan, which is the copper and gold, okay? But if we said, look, I want a precious metal list, well, like literally precious metals. I want, in other words, more metals and mining. Well, super quick, just go to scan and just go to this drop down, go scan in, industry, materials, and you're trying to nail not just the sector, you're trying to nail the metals and mining industry group, okay? Now in this list, I'm saying, look, we're looking for something above 40 and 500,000. We did this before and it wouldn't change. If we did that and said, look, I want something north of 40, more than 500,000 volume right now, not average, right now. And if we did this, we're actually going to see that when we actually run that, we should actually get a list that actually comes back, and I'll rerun that, and maybe it's run it on your side. Tell me what you find. Now, when we actually do that, okay, there we go. So here's the list of stocks that come back. The reason why I said there's not as many as you think, there's only 21 total stocks that come back. That's it, okay? So now when you take a look at this, the reason why I just did what I did, now, by the way, if we said, can we put this in a list? Yes, how? On the right-hand side, we're going to click on that 3 lines, go save as a watch list, okay? If we save as a watch list, I'm just going to call this precious metals, and I'm going to put the date here, okay? Because you did this maybe 2 weeks ago or so. Save. Now, what's nice about this is if we go to the Market Watch and go right back to quotes, click on the drop down. This now goes into, let's say, are you looking for a personal list? Are you looking for a public list? What do you want? Well, I want a personal list, and I want that personal list that's called precious metals right there. Now, what's going to happen is we can kind of filter these stocks, and my gosh, where's my sunglasses? Okay, I can't. There's so much green out of the chart. I can't. It's so hard to see it. Okay, now, if I take a look at this, now, by the way, this is what happened 2 or 3 weeks ago when we did this before. That's why there's another precious metal list. If we said, one of the questions was asked regarding SCCO. There's a lot of green. Okay, now that doesn't guarantee it's gonna be green in a week from now, a day from now, but it's like, this is just showing where it is now. Now, if you look at SCCO, the one thing we kind of want to make mention of is that relative strength. This is the performance of that stock compared to the S&P 500. Okay, so this is showing, if we said the precious metal space, most stocks in precious metals are outperforming the S&P 500 in multiple different durations of relative strength. Now, when you look at the SCCO, which was the question, we also see that we got a trend 3, okay, on the weekly chart as well. We got a bullish bounce. We got a 20, 55-day high, breakout. We can also see that breakout if we go over here to the right-hand side. Where in that breakout are we? Well, the break is continuing from yesterday, okay? Okay, I got to tell you something kind of interesting. Thank you for filling out the survey. Someone said this last week that I was a terrible teacher. Don't type in the chat. I'm just going to tell you. I just want to let you know I read all the surveys. Said I was a terrible teacher. Said I was the worst teacher and a terrible teacher. Here's the thing. Remember what I said at the beginning of this class. I don't just teach you the instruction, the head knowledge. There has to be a passion behind this and a desire. There was a gentleman that one time said, I listened to you for a year. I didn't thoroughly enjoy your classes for the first year. But after the first year, I realized what you were doing. You were trying to help me build a passion and desire first as I got my head knowledge. So as a coach, you're never trying to be the friend of the player per se. You're actually trying to coach them so they can go farther than you did at first. That's why I teach the way that I do, because I'm trying to help you go farther than I actually did at first. So just understand that, for example, when I kind of maybe emotionally get under your skin and cause that reaction, that's what I'm trying to do, because I'm trying to get you to really ask yourself the question, do you, number one, to have a financial goal, and two, do you really want it? If you build a passion and desire, you can actually learn the head knowledge, okay? Now, the one thing is we're going to go to the SCCO, and we're going to bring this up. Now, if we look at the SCCO, we got to ask ourselves the question. Now, there's two questions here. Is it too high? Well, remember the tool that we shared before. If you look at the SCCO, and let's pull this up if we can, and it's not showing right there, but let me actually pull this up. Let me actually see if it's showing. The one chart I want to look at is, I'm trying to actually grab, there it is, SCCO, okay? Now, if you look at the SCCO, the question was, hey, Jay, wonder if it's more than 7% off the moving average. Well, remember, that's the 10-period moving average right there, right? That's the 10. This is 3% above the 10-period moving average. The red line is 5% above the 10-day moving average, and 7% is the white line. It's not to say that the investor can't buy 7%. It's just more likely that there can be mean reversion, okay? If someone is going to buy up in here like they were yesterday, if they did, they're probably saying, look, if we fall down below that 175 level, I'm not going to ride it all the way down to the 10-day moving average. Does that make sense? Now, what did I say the goal was? The goal for many investors, they're trying to buy in between the blue and the yellow line, or the blue and the red line. But if someone is establishing a new position higher than the red line or at the white line, man, you probably have a tighter stop just to make sure you're not taking the fall all the way back down to the 10-period moving average. So on SCCO, we would say, yeah, the trend is going, but we would ask ourselves the question is, are there other stocks that maybe are not as elevated? Now, here's kind of the nice thing, and I got to say this last in the 30 seconds, okay? When I pull up this list, the nice thing about this is with this chart, which I shared with you so you can go farther than I did at first, is if I pull this up and say, give me that personal list just real quick. Oh, if I pulled up, let's say WPM, okay? That is also something that's more at the red line, maybe not as close to the white line. But we could also pull up that list and say what other stocks are in there that just might not be as high. STLD, NUE. The NUE is, for example, more at the yellow line. Those are steel. Steel has been forgotten by many investors, but if we're saying what is kind of closer to the 10-period moving average that's also on the list, it's NUE. What is also a steel-based stock that has maybe not even gone to the yellow line? The keyword is yet. That might just be starting to get a push to the upside. It's STLD. So this becomes a nice, we called it yesterday, a virtual tape measure, a ruler, okay? So to kind of really see where we are, okay? So notice what we did here today is we put some new positions on. We talked about taking a position or two off, but then we also talk about using the tools that we discuss. And you'll see this throughout 2026, okay? 2026. Always remember that with what we talked about, there is a part of this head knowledge, but there is a part of this as far as building the passion, you love it, and a desire to reach your stated goal, because you'll have ups and downs with investing like all investors. Now, I'm out of my time here today. We got Cameron May that will be teaching short verticals next. I want to actually say thanks to Connie Hill for answering those questions in chat, and thanks to all of you. Now, tomorrow morning, I'll be back on ETFs right at 9:30 a.m. Eastern tomorrow. Join us live. It's live only as we talk about domestic and international markets. So remember, with what we discussed, it's done for example, illustrative purposes only. And this has really been the class on trading the trend. As JP said, what trends are you riding? JP, you couldn't have said it any better. Have a great day. See you back tomorrow. Bye-bye.